Very warm welcome to all of you. Welcome to my YouTube channel today. Okay, and those people who are watching this on YouTube can follow me on Twitter, Telegram, etc. Down below, the links are given. All right. So today our agenda for this little video, it's a very cool and casual video. Something I was thinking about this afternoon after the market hours. So I called up my team and I asked them, you know, which is the most frequently asked question. Let's make a list of the most frequently asked questions of the absolutely new traders, of the absolutely novice traders, people who are completely new to the market or relatively very new to the market. So of course there was a list of questions, and because people directly contact me and call me and talk to me, I know a lot of frequently asked questions. So one of them was, is there a strategy or a scanner? One of them was, how do I get into algorithmic trading? One of them was, so can I make money consistently out of technical analysis? But today we are going to take one of the most fundamental basic questions. What is the most basic question and the most frequently asked question? And I feel this should be something which every trader, even if you are a new trader, if you're a new trader, very good. And even if you are a conditioned trader, seasoned trader, someone who knows what trading is about, what markets is about, still this video is going to be very helpful for you. Today, we are going to talk about the difference between fundamental analysis and technical analysis. What is the difference between the two? And this is one question which even personally people have asked me this many times. And mostly people ask from a point of view of a bias. Maybe they are biased for something, they are biased against something, and they are very confused with what they should go about in the market with. What should be methodology for their trading or the investment decision should be, right? So I'm going to open up everything in front of you. Then first of all, technical analysis and fundamental analysis are two different school of thoughts. So when there are two different school of thoughts, they have two different theories and they come from two different set of theories. The assumptions are different, the conclusions are different, the perspective is different. They are not an apples to apples comparison. Okay. Now we all know that there are stocks, there are equity, there are various other asset classes also, freely traded markets, exchanges which are regulated. And in those exchanges and all these participants, which are traders like you and me, okay, investors like you and me, we are participating in this market, right? Now, let's take the first foremost step. Let us understand it outside the context of trading and investing. Let us understand the first layer of difference between fundamental and analysis. What is the core difference? The core difference is, say for example, now we are not talking about the markets, we are talking about something else. We are talking about an outside situation. Say for example, I'm sitting in a mall, okay, and say for example, it's an open air mall and there are many stores right in front of me, different showrooms, different brands and stores, etc., different designers. And then what happens? I'm sitting on the bench outside and I'm looking at the, I'm looking at the crowd going, coming, and I'm looking at the different brands, etc. Now suppose I have to spend 5,000 rupees which I have in my pocket on some really nice shopping I want to do. Okay. Now, if I am fundamental analyst, if I'm thinking like a fundamental analyst, the way I would go about it is, I would go into every shop. I want to go into every store. Suppose I want to buy a pair of jeans or two. I want to go into every store and check out, okay, this is the material, okay, this is the making, this is the stitch, this is the design, this is the brand. And then outside some store, I also see there's a 15% off. Okay. And then there's a sale somewhere else, etc. So I will go to each and every store. I will look at each and every product. I will go and look at, okay, how much cotton is there, how much this is there, what's the material used. I'm going to dig deep into understanding if I'm buying something which is worth paying for. That is how I will use my 5,000 rupees to shop if I'm a fundamental investor, fundamental analyst, right? Now, What if, and this is my expertise is technical analysis. Many of you who are following me already know, and those who don't know, they can check out my other YouTube videos. Anyway, so what happens is that when we are thinking as a technical analyst, so suppose I'm thinking as a technical analyst and I'm sitting outside on the bench looking at the various stores in front of me, the different brands and showrooms, etc. What I do, I don't go into each and every showroom. I don't go into these details. What I simply do is I want to see which is the store with the highest footfall, which is the store with the highest footfall. Because if there is a high level of footfall in some store, then I can assume that with the mass psychology going towards one direction, mass psychology thinking towards the fact that this is very attractive, there's a lot of interest in that product, I will go and buy that product, because if a lot of people have interest in it, then it's highly likely that something interesting is going on. Something interesting is about to bloom up, right? And I want to find that in the early stages before it becomes, 8 or 9 p.m. or 10 p.m., 11 p.m. when the mall is about to close. Before that time comes, I want to find in the early stages, in the afternoon, in the evening itself, where is the highest product, so that when I go, I don't run out of stock. The store doesn't run out of stock. What am I trying to say over here? When you are a fundamental analyst, when you are doing fundamental analysis, and I'm about to show a lot of examples like this, both in the short term and the medium term, even in the long term, of these differences which are there. Okay. When I'm thinking as a fundamental analyst, my thought process is attuned towards the fact that the markets are following a certain hypothesis, which is called the efficient market hypothesis. This is the basis of fundamental analysis. That means that if I go into the balance sheet of each and every company, I want to trade the stock of Reliance, Tata Steel, Z Limited. I want to go and trade these stocks. But before that, I go into the company's balance sheet, not the stock price, but the company's balance sheet. I check up that this is the company's growth rate in the last so many years, so many quarters. This is the cash flow. This is the kind of business they do. This is the economy they're doing it. These are the legal aspects of their business. And I go into every possible detail to find out what the future growth prospect of that business is, of that company is. Now, suppose I want to buy a company X. It is an amazing growth prospect such that according to my valuation model, I get to get a rough idea that this should be value, or the intrinsic value, or the should be value of that particular stock should be 500 rupees. Okay, the intrinsic value or the should be value of that stock should be 500 rupees. And if I go in the market and I see the market price, and if the market price is 300 rupees, I should go and choose to buy that stock. Why? Because under the fundamental analysis, something called efficient market hypothesis is there. Now, what is efficient market hypothesis? Okay, efficient market hypothesis, many of you who are non-finance background and your higher education maybe may have not heard of it. It's completely fine. Many young people are watching it. Just understand it as a very simple concept. A simple concept that efficient market hypothesis, the word efficient, the market can be efficient. The market can be efficient if it is pricing in all the news that is out there. So, for example, there's a quarterly result out of a particular company X, and the quarterly results are booming. The booming. Okay, there's been high growth rate, more than ever, highest sales, profits, earnings per share. The debt has gone down, etc. Okay. The assumption of efficient market hypothesis is that the price will quickly grab in all that news and absorb that news. Therefore, the price will go up considering the kind of news there is and the intensity and impact of the news there is. Okay. So this hypothesis says that the price will completely take that hit. Right? Now there are different forms of hypothesis under this. There's a weak form, and there's a semi-strong form, and there's a strong form of efficient market hypothesis. Now I'm not going to go into details, but what I'm coming to is that efficient market hypothesis is a theory. Okay, it is not being 100% clearly proven. Why? Because there are two assumptions under that theory, and this we are talking about fundamental analysis. The two assumptions under that theory is number one, that the market participants act rationally. Okay. Now we are in the markets, we know, we've seen people, and we've seen ourselves more than anything else. Do we act rationally? Do we always act rationally? Do masses act rationally? This is one question. Okay. Anyway, so fundamental analysis, first assumption that we all act rationally. And the second assumption is that under all these circumstances, right, any form of analysis cannot get supernormal returns. That means the highest return which you can make is equal to the index or equal to the particular return generated by the stock from year to year. Okay. So in 2018, and this was the index, 2019, and this is the index. You cannot beat it. You cannot beat it consistently. You cannot generate alpha. You cannot generate supernormal returns. Sorry. Under these circumstances is the basis of fundamental analysis. Now, why is fundamental analysis so widely spoken about? Why do all the time there are stories attached to it, there are articles, blogs, news, media, the business news, etc.? Well, the reason is the basis of investing, the basis of long-term investing, and the basis of long-term investing even done by people like Rakesh Jhunjhunwala or Warren Buffett. It is under the assumption that yes, fundamental analysis is true, and I have to act as if it is true, as if efficient market hypothesis is true. Now, what is efficient market hypothesis? How can that be true without any proof? How can that be true? So it is not something which has been proven, or not something which will unfold overnight or in a few days. But suppose I do look at stock X and I say the intrinsic should be value is 500 rupees, and in the market it is trading at 300 rupees. If I see that, then I should, as an investor, act in a manner that I should go and buy the stock as if efficient market hypothesis would be true. This is the basis of even the most successful investors and even the most successful investors who held through all their positions for a very, very long number of years, because they have that belief under these assumptions and under this analysis. Okay. Now let's come to technical analysis. Now, what is about technical analysis? Technical analysis is the study of price. Now, all the kinds of efficient market hypothesis theory, they do not support technical analysis. It is completely different. Okay. Before we jump into the details of technical analysis, let me make it very clear to you. Two things very clear to you. Number one, any analysis is a probability. It is not a certainty. It is a probability. It is not a certainty. Even if you are a Men in Black or a CID or a CPI, I don't care. You're a fundamental analyst, technical analyst, you are still dealing with probabilities. You are still dealing with probabilities. You are not dealing with certainties. Number two, every analysis is subjective. So, what may be the version of a fundamental analyst A and a fundamental analyst B? There may be two different versions. Okay, a technical analyst A, a technical analyst B may have two different versions. So these are, different versions of analysis are there because there is a subjectivity involved. There are many factors involved: reading and analyzing, the experience of an analyst, and the foreseeability of the market, the liquidity, the time, the volatility. Lots of factors are there. which are, very subtle small factors that makes analysis very, very subjective, right? So now getting into technical analysis. What is technical analysis? Now, technical analysis is the study of price. And in the study of price, we have noticed over many years, in fact, it's almost it's centuries old, technical analysis centuries old, 300 years back in Japan, about 100 and plus years back and coming till date also in the US and all over the world, in fact, now. Technical analysis is a school of thought which is widely accepted, practiced by, and many of the most successful traders and hedge fund managers in the world are using technical analysis, are studying through the school of thought of technical analysis. What technical analysis chooses to do is the first assumption that prices and markets, okay, the prices and markets are such that the first assumption is that people don't behave rationally, people behave emotionally, people behave irrationally. Now, isn't that true? Like the masses, there's all the time this humdrum going around us. There's a lot of news around us. When there's something big happens, something small happens. In different time frames, like there are different crowds. I know there have been times that some of my friends who didn't know anything about the market, they are going and investing. Now, those people who don't know anything about the market going and investing blindly because in the last 5 months the stock market has been very, very hot. If the stock market has been very, very hot, even the rarest of rare crowd is getting and participating in it. Then you have the intraday traders who are participating. There's a mass mechanism in intraday. There is so much volatility one can see many times, right? Almost on daily basis on every stock, and on some days very, very high volatility. So people broadly, all the participants put together, they don't act rationally. They act irrationally. They act in extremes. That means if the stock price of the stock X, the should be price is 300 rupees. When the price goes down, the should be price is 500 rupees. The price goes down, the price can go really down, the price can go up, it can go far more than 500 also. It can overstretch also. And if this entire assumption, what technical analysis does is try to find out where the mass mentality is building up, where the mass mentality is building up. So as I told you earlier, that I'm sitting outside the mall, and suppose the mall closes at 10 p.m. in the night, at 4 p.m. I start noticing that see the highest footfall is tilting towards the showroom which is selling jeans by Levi's. Okay, no offense to other jeans making companies or other denim making companies, but yeah, suppose most footfall is coming towards the Levi's showroom, and I'm able to notice that at 4 p.m. So by the time it is 10 p.m. or by the time it's more late than 4 p.m., I can go and still get that pair of jeans. Now what happens is when technical analysts are trying to do this, I'm trying to do this every day. Every day, people who are following me on Telegram, even today I share an idea of a short position that one could take, of a fall in the market which was expected, and that's followed through in a few hours. Like within the next 2 hours, the entire fall came. And tomorrow, I think again, these areas are very important where we can fall further from. However, however, the idea is that I wanted to think about, or I wanted to perceive when that fall is going to happen. When that fall is going to happen before it was happening, before the major part of the fall came, before I could take such a smooth and easy and comfortable entry that I would get a meat of the move. Now, this is what technical trading strategies or trading patterns are about. Now, let us understand this. Why technical trading? Why trading on technical analysis? And why is always investing associated with fundamental analysis? As I told you all, investing and fundamental analysis are closely associated. One, investing is very long term, and two, just like Rakesh Jhunjhunwala and Warren Buffett of the likes, all these people are are investing as if the efficient market hypothesis is true, and they're sitting through stocks for long term. Okay. Now, as a trader, my agenda is different, my liquidity is different, my business is different, my money making patterns are different, right? I'm using leverage, which maybe most of the investors are not using. So instead of if I'm investing 1 lakh rupees, I'm buying stocks worth 5 lakh rupees or 4 lakh rupees or something like that. I mean, significantly more than the money I'm using, right? So because I'm using significantly more money, and also because I'm trading something in the short term, I would like to study the price, because the price will determine how much money I'm making or losing on that position, what price I enter, what is the price at which my analysis will be invalidated. And this is why technical analysis is used to study the price, and that is the study of price, and it is used to trade. Because I want to take leverage only in those places where I can define my risk. I can say that, okay, fine, if this stock of 500 rupees, if is going to go down till 490, then all the analysis which I have, in place to call it from a bullish perspective, that gets invalidated. So I have 500 rupees, if I buy 100 shares, if it goes up, good, but if it goes down, I should limit my loss. It's about risk management at the end of the day. So a technical trader, a technical analyst would think in terms of looking at the markets from the price perspective. So today we are going to see some examples of these differences, and both under technical trading, which many people don't understand, which is the first thing which I teach all my students in the first session itself, is that technical trading is not about making money in every position, because the number of trades are more frequent than the number of investing ideas. Every day there's something new in the market. There are going to be times when you will be wrong. Any analysis is a probability, and you have to define a stop loss. The second thing is that you cannot think in terms of one trade. You cannot put all your money in one trade. You have to think in terms of series of trades. So if I am, if in the series of 10 trades, the next 10 trades I take, if I'm correct most of the times, if I end up making more money than losing less money, that is having good risk to reward ratio on all these trades where I'm making money, then I would net profit at the end of those 10 trades. So this is how a technical trader professionally thinks. And something very basic which most people don't understand, because they're so emotionalized with the market that they want to think only in terms of extreme. They want to make up all their past mistakes and losses in just one trade. And that sort of hope thing is not going to work. You have to be rational. And this is the reason why it has become so psychologically difficult, that 95% or more of the people actually don't make money in the markets. They lose money in the markets. And I, as a curator and aggregator of technical analysis knowledge and trading psychology knowledge, I help you all into growing up into psychologically very mature, very clear, and step by step. There's a learning process of step by step building your strategies in such a way that you're coming more and more amicable with the best market moves, right? So let me give you a few examples, and we see what is the difference between fundamental analysis and technical analysis. So here I have with me, you can see the price chart in front of me. This is the chart of Nifty. This is the hourly chart of Nifty. And this is a very good time to actually see what is going on in the markets, right? So why is it a very good time? Because recently we saw a very strongly poised news for the economy, which was having the national elections, assembly elections, and Modi ji, Shri Narendra Modi ji, becoming the Prime Minister of our country again for the second time. So all these moves which have been happening on a lot of fundamental basis, as fundamental analysts would talk on certain level. And from the technical point of view, there have been a lot of important influence on the charts, which I can see and I have traded on, which I'd like to share with you. I'm going to take, other than this, a few more examples. Okay, so the hypothesis of efficient markets states that the markets want to be efficient. They want to catch up to whatever news there is, right? Now, if I look at the hourly chart, this is the daily chart. I'm going to open the hourly chart. This is the daily chart. Every candle is 1 day. This day where you see this big gap up, this is the day we had the exit poll. The exit poll. And the market is showing us that it has priced in a lot of the fact that a stable government again is going to be there, right? Which is the BJP government. It's going to be another round of it, and it's going to be very stable. That is what it's trying to show us. But how can you trade the entire thing when there is no news? For example, when the market went up over here, there's no such news. When the market went down over here, there were certain pressures in terms of a trade war between America and China. But how can you quantify that? That if the trade war is there, and the trade war is still continuing, by the way, if the trade war is there, the market should go 200 points down or should go 500 points down. Similarly, when the smaller things, like for example, which are not impacting the entire global economies, but India, for example, particularly, say the monsoon predicted are very, very good. The next day, now that is a very big boost for the economy. A lot of it is a lot of us are dependent on this agriculture. What happens is, am I able to find out how many points the Nifty will go up or down? No. But this is what the difference between fundamental and technical analysis. Technical analysis allows you to find out this difference. So let me hide these Bollinger Bands which I have in front of me so that we have a clear picture of the chart. Okay. Now let's look at the technical analysis point of view. Over here, I see something called a head and shoulder pattern, right? The head and shoulder pattern. Now this area is the 10,550 area. Sorry, 11,550 area. I call it the head and shoulder pattern. I mean, this is what it is called by a lot of researchers and authors of technical analysis, the head and shoulder pattern, which looks like basically a man with a head and two shoulders, right? And this is the entire pattern which was made. It took a nice number of days, and the pattern broke out at this level. Now, when it broke out at this level, there was an extended move which led up towards the much lower areas. Okay, fine. Now, I'm going to go back to the daily chart. So, according to daily chart, also there seems like a very significant fall, which we just saw out of the head and shoulder. But before this, there was a resistance breakout. A resistance breakout a few months back at exactly the 10,000, 1100 levels. So 10,000, 1100 and 20 zone, I'm making this line. The price came and fell. The price came and fell till this point. Now, till this point, why does the price come? I'm just saying that there are these repetitive patterns which are always happening. This is what technical analysis is about. That human beings tend to repeat their behavior. They tend to repeat their behavior. Man is a creature of habit, and there's a lot of addictive, negative patterns of behavior associated with trading for most of the human beings. And when all these sellers which were taken out over here very powerfully come back over here, the buyers are stronger now. We'll see more such examples. First, let's look at the now buyers are stronger, and at this zone I see something called a cup and handle pattern. Now cup and handle pattern is present over here with a breakout point at the 11,300 mark. So at the 11,300 mark, the pattern has broken out. It took me few days. It took us few days to make that pattern, right? It took us few days. It was something which is on the hourly chart after a deep down move, as well on the daily chart. On the daily chart after a move which is significantly down, but it is corrective move in nature, and that means that overall trend is still up, and this was a correction in the overall trend. We saw that after the break from this pattern, there's a huge move which came in, and this is the day on which the exit poll has happened, and this is the weekend over which the exit poll has happened, and the market has gapped up. But the cup and handle breakout has happened much earlier. So we can see that technical analysis, which is the study of price, that helps us to find out the fall. Even the news may have happened a few hours before the fall, or a few days before the fall, or a few days after. It is a different school of thought. This news took place after the breakout had already happened. Okay, the breakout had happened over here. The news took effect over the weekend. This is Friday, this is Monday. It doesn't matter. It does not matter. Because what I'm trying to tell you guys over here is that these two are different schools of thought. I'm not wanting to compare one with the other. A lot of people have come to me in the past. Even now, sometimes they come and say, this does work, this works, that doesn't work, etc. I don't know. This is not a musical instrument that it will work or not work. Okay, this is basically a analysis. I'll show you another example, and since we are talking about this pattern, I'll show you two examples of the head and shoulder pattern. One was at the very beginning when I started to teach. Actually, I had a lot of seminars in Calcutta, and somewhere during that time, there was this head and shoulder pattern which was clearly visible to me over here. And the same scenario was there. You can see this is a Friday, this was a Friday, and the breakout had already happened. Now, this is a head and shoulder pattern with a breakout point at 8,320, say, for example. Yes, exactly this. And this breakout point had already, the breakout had already happened from this pattern. Now, this is a distribution pattern, and there are many details to technical analysis. Patterns are not just, there's just one topic. There are a lot of things regarding indicator, candlesticks, etc. A lot of my free videos are there which you can check out. And if you feel like, you can join my 15 session full-fledged course. Okay. So the contact details are given below, not to worry. So this entire, this is an online course. This is an online course, and this entire course is covering a lot of these different topics. Okay, patterns are one of the topics. A lot of different topics are there. Even trading psychology is covered, etc. Coming back to this head and shoulder pattern. So I remember giving a seminar on this Saturday or Sunday, and I was talking about how this is a pattern that looks extremely bearish. I'm short on markets in some way or the other, stuff like that. Either short on a stock or particularly this index. And on Monday, there was the news of China devaluing its currency, yuan. And there was a global ripple of negativity, pessimism, and bearishness in the markets. And so was it in India. The next day, market gapped out significantly and went really down. And this is what I'm trying to tell you all. This is exactly what I'm trying to tell you all. Then again, the news came later. The price pattern was available earlier. Now let me go back to something more recent. The stock Maruti, right? The stock Maruti had its quarterly results. The chart is about to open. Had its quarterly results, and before they had their quarterly results, I saw something which was close to a distribution pattern breakout from the 7,100, excuse me, 130 zone, right? Somewhere or the other here. Yeah. Somewhere this zone, okay, the prices are always a zone. It's not about just one point anyway. So somewhere in this zone. So the breakout had happened a few days back, and on the day of the quarterly result, there was a huge move on the downside. I've spoken about it on Telegram very recently, those who have followed it, and there has been a significant move. Now, after that, let's look at what's happened with Maruti. There have been all these kinds of news coming in and out, auto sales numbers, the next quarterly result, etc. What I'm trying to tell you all is that for that day, I don't know if efficient market hypothesis works or not. I simply know at that day, a lot of people were emotionally acting in such a way that they want to sell the stock. They wanted to sell the stock. That's what people are emotionally acting. And the markets behave in extremes. The next time price comes to these areas where the buyers have protected, the price comes back up from here again. The price again comes back to these areas where buyers have protected it, the price goes back up again. So the ongoing cycles and patterns of mass behavior is what technical analysis is about, technical strategies are about. So on that note, let me take you to the last example, which is the stock Reliance. And I don't know if I've had what I want to show you made on the chart, but let me connect with you on making a pattern very clear in front of you. Though on a smaller time frame, which is the daily chart, I see that there is a very clear symmetrical triangle pattern formation happening. So this is called a symmetrical triangle, where the two trend lines, and there are a lot of rules in technical analysis. If you really want to learn properly, you should join the full course, which is an online course. I'll send, you can just contact on the number given below on the description box, because it's extremely very, you have to be very clear about what you're looking at. And then there are aspects like indicators which can help you, candlesticks which can help you. Okay, and no two patterns look the same. No two patterns look the same. They're not textbook like. Okay, so this was the entire pattern I was looking at, which is symmetrical triangle breakout. I've already drawn the symmetrical triangle, right? And as you can see, the day this breakout point was broken was this. And I must tell you all, the Reliance quarterly results were on this day. This is before the news. So a technical signal again coming to us before the news has happened. A technical signal again coming to us before the news has happened. Another technical signal being added to it. Now, I don't know how long the news will have significance. For Maruti, the significance lasted a day. People acted in extremes, mass mentality and mass psychology took the prices down. Everybody is selling, getting on one direction. And then another set of hands come in who want to book their profits, etc. It's a long game. Not getting into the details here. But in this case, the day it went up on the quarterly results, it continued and it gave us a fresh trigger over here of a resistance breakout at 1185. It continued. It continued going much higher. It went up till 1400. Okay. So guys, on this note, this is what I want to tell you all, that fundamental analysis and technical analysis, this is what I want to tell you all. So guys, on this note, this is what I want to tell you all, that fundamental analysis and technical analysis are two separate things. And sometimes you will see that there is no technical evidence and there are sudden moves in the market along with the news. And sometimes you will think that something which lasts for more than just the short term or intraday and more than the medium term is coming through both these mediums. It does not matter what you think. What matters is what your methodology and what your agenda is. If your objective or agenda is to make money in the short term, have an entry point, manage your risk, then you should choose technical analysis. Then you should choose to devise these technical strategies and a trading style around it. I can help you do that. But if you're using technical fundamental analysis, use it for investing, it is better. Otherwise, yes, there's some knee-jerk reactions in the market which can be a catalyst along with the fundamental news. But it does not define an entry exit. It does not define the kind of risk management which technical strategies do. So those who ask me about trading, technical analysis, understand how these are related. And how those who ask me about investing, don't think that investing is not speculation. Investing is also speculation. It is just that it is of a different kind, it's a different category, for a different time frame, and on a different basis. Okay. On that note, I will see you again sometime on my YouTube channel. I will take up another frequently asked question. I was completely unprepared for making this video. I happened to just talk and show you some examples. I hope you all liked it. There's a like, share, comment button over there. You can do any of that if you feel like. And do share it with your friends. Do spread the knowledge. The entire purpose of Technically Sorted team, of me and my team, is to spread knowledge, spread a lot of knowledge. Whoever wants to capture it, however, there is never any dearth of digging deep into passionately into the markets and market analytics. Thank you again, and I will see you. Take care, enjoy, and goodbye.